Welcome to episode number 45 for the National Land Realty podcast, where we discuss all things land. Our goal here is to inform, educate, and entertain those of you who own land or are interested in the buying and selling of land throughout the United States. My name is Mac Christian, and I am the Chief Marketing Officer here at National Land Realty. I'll be your host for this episode. If you pay attention to real estate news right now, you're going to hear a few common trends, such as interest rate increases, risk in existing commercial markets, Elon Musk talking about the risk in residential markets, and Midwest land values. Many buyers and sellers are sitting on the sideline right now because doom and gloom sells. But is it accurate? We at National Land Realty are seeing strong markets across the nation without any strong corrections from a brokerage perspective, especially in rural land and commercial development. However, as a brokerage, we may not be seeing the full picture. Today, we're talking with Spencer Floyd from AgSouth Farm Credit out of South Carolina. Spencer specializes in rural land and farm lending, which makes him an excellent source to have this conversation with. Are we in trouble? Is the land real estate world falling apart around us? Find out. Sit back and enjoy. I am sitting here with Spencer Floyd. Spencer works with AgSouth out of South Carolina. And Spencer, just tell me a little bit about how you came to work with AgSouth and just a little bit about AgSouth in general. And we can kind of jump into the general topics here.
Yeah, Matt, great to be with you today. Like you said, my name's Spencer Floyd. I live in Columbia, South Carolina. I work out of our Lugoff or Camden office in South Carolina, which is about 30 miles east of Columbia. I grew up in the low country of South Carolina in a small rural town called Walterboro, where the Murdaugh trial actually recently took place. So knew a lot about what was going on there. Okay. I went to college at the University of South Carolina. I graduated with a business marketing and management degree. I am an outlier to the typical farm credit loan officer as far as my experience in past goes. I did not grow up on a family farm. I did not go to an ag school. I just got a business degree. So I happened to intern actually at our parent bank, AgFirst Farm Credit Bank in Columbia, South Carolina for 2 summers while I was at South Carolina. And that actually connected me with one of the farm credit associations in our footprint, AgSouth Farm Credit. So I had the opportunity to go out and shadow a AgSouth loan officer. We went out on a farm visit with one of this gentleman's customers. We went over one of his particular plans that he had a loan request for. And I knew immediately after we got back to his office that was something I could see myself doing long term. So that was my end. I started 7 years ago, actually. I was hired in a marketing role, worked in that position for 2 years, and I have been on the credit side lending money for the past 5 years.
Oh, you started with marketing, you fool. You got out of it. You smart man. Well, you got taken there at the beginning, but it sounds like you righted yourself.
I did. I had the very best boss in the world who hired me and gave me a chance. And I could not be more thankful for her and the relationship that we still have. And some people actually said it was the opposite. Man, you should have went from lending to marketing.
I give my team crap on a pretty constant basis of like, okay, you all signed up for this. You're in marketing, so get ready.
That's right. So I do miss some fun aspects of that gig, such as doing things like this. So
this is some of the more fun stuff. So tell me a little bit about AgSouth just in general. You mentioned farm credit. You guys work with farm credit. Just so that the general listener has an idea of what you're talking about here.
Yep. So we are a farm credit lending cooperative. So we are based out of, recently Statesville, North Carolina. We service about half of North Carolina, 2/3 of South Carolina, and about half of Georgia. I say recently because as of 2 months ago today, we merged with a sister company, Carolina Farm Credit. Now we're one AgSouth Farm Credit across 3 states. So before now, we were just in South Carolina and Georgia. But we are a farm credit cooperative, meaning we lend money to farmers, rural homeowners, and rural landowners. So we're not like a traditional bank. We don't have deposit accounts here. We were chartered in 1916 by the Farm Credit Lending Act. So we were set on earth to make loans to farmers and rural communities.
Got you. And I got to backtrack a little bit. You said you grew up in a small little town. What is small little town for your area?
So small little town, Walterboro it's known for being a stop off of 95. So not terribly small, but it is for rural community sake, but it's small in the general scheme of things. So Columbia, South Carolina, if any of your listeners or audience have been there, it's a city and it's the capital of South Carolina, but it's still not a large city by any means. Columbia is much larger, 20-fold than a Walterboro. So
I got you. So I was going to say, you mentioned not growing up on a farm or something like that. And I was like, there are some qualifications to growing up in a small town. Like growing up in a hillbilly town does give certain qualifications for it. That's like half of my resume right there.
Well, what's fun to do, what we did growing up is we went to Walmart and hung out in the parking lot of Walmart. So that's about what you have to do in Walterboro.
That's perfect. So AgSouth, and you mentioned Farm Credit a few times. And as I had to get corrected here, and so I wanted to make sure anybody listening understands too. As I was talking to Spencer initially, I was saying, we want to speak on a national level because not our whole listening audience is in South Carolina. And you specified that you work with Farm Credit in general. So this does apply nationally, but there are certain little wrinkles there on a state by state basis. But a lot of the things we're going to talk about here apply nationally and not necessarily just to your area, right?
Absolutely. Farm Credit is a nationwide system. So no matter what state you live in, there is a Farm Credit Association that services your area.
Right. So now just to go out of the gate swinging, I want to talk about interest rates and what sort of you're seeing in the markets. I think everybody's seeing, there's a lot of worry kind of nationwide. There's the rumblings of like the commercial loans coming due here at the end of the year that a lot of people are keeping their eyes on, and they're keeping their eyes on sort of just lending in general. What are you seeing, and sort of what is the effect on the ag loan market that you are currently seeing?
So it's no secret rates are up there for everybody right now, and they jumped up about 0.5% across the board for us late last week. I know commercial banks, they are constantly rising, just like home mortgage lenders as well. So they're up there. Historically speaking, our ag loans and our land loans, they are most always going to be a little bit higher than a conventional home mortgage, because that's what resonates with people, right? They know home mortgages, they know rates for the most part if they're in the market. We're always going to be a little bit higher than a conventional home, 30-year home mortgage. So right now, depending on length and term, we have the ability to go as short as 1 month on our terms. We have the ability to go as long as 30 years for home mortgages, 20 years for farms and land loans. So right now, depending on credit quality, your term length and type, we're anywhere between the upper 7% range to the upper 8% range, low 9% range even.
Gotcha. Okay. And that's sort of common with just land in general, right? When you're talking, and it changes, right? When you have a residence on the land, you can consider it residential. But when you're talking, especially your rec properties, your farm properties, those kind of things, ranch land, right? It takes in that too. One, it's harder to get a loan just in general, and it's harder to finance. It's harder to assess, like the whole thing. Like, talk to me about the complexities about that a little bit, because it's always interesting.
It's a lot. And you can go out there and you can find commercial banks that are willing to finance raw acreage purchases. It's less likely than going out and calling or finding or researching any home mortgage lender, because there are so many out there who are wanting to make loans on homes, but there are far less that are willing to make loans on vacant land and farms. So if a commercial bank out there is willing to lend on raw vacant land or farms, your down payment requirements are generally very hefty. So for the most part out there that I've seen, 20% is the rock bottom minimum, but it's far more common for 35%, 50% down payment requirements. That's where we're a little bit different. That's a strength of our products. 15 to 20% is our minimum down required for farms. So anything as little as 5 acres is the minimum requirement for a quote unquote farm, or there is no maximum acreage. We do also finance rural lots, anything less than 5 acres, where somebody is planning on building a primary residence at some point in time. 15 to 25% is the minimum down payment required on something like that. Going back to farms and term lengths, that's super complex, depending on who you call and who you get in touch with. But for farm credit in general, most every farm credit association out there can go out as long as 20 years for terms. The kicker here is we can do this at a fully fixed rate. That is extremely uncommon in our marketplace. If a commercial bank is willing to lend on that farm, it's typically associated with a 2, 3, 5, or 7 year ARM. So you've got a fixed product there for a shorter term. They'll amortize it over a 15, 20, even 30 year AM possibly. But at the end of that balloon, once maturity hits, you better be ready to pay up, or hopefully you can refinance elsewhere.
Right. And it's those arms can get you in trouble on that. And that's so those have kind of stayed standard in agriculture or rural land where they haven't in residential because of the sticky situation that we got ourselves into in 2006, 2008. And that's still, so I didn't actually realize that part. So the arms that were still in there.
Yep, absolutely.
Got you. And so with interest rates rising, sort of what's the reaction that you've seen in your marketplace? And I think that we could probably apply this nationally just because South Carolina has been such a hot market for, the last 5 years straight. It's just been on fire. And I think you could apply a lot of what you're seeing there to a national level. Absolutely.
So in my marketplace in general, so I service the Midlands of South Carolina. So 3 fairly large counties. It has been identical in my world compared to the home market in these past 3-4 years. It's been just record-breaking years, year over year, whether that's transaction volume, you name it. It has just been gangbusters and hard to catch your breath for the most part. Our rates took a steep incline about 6, 7, 8 months ago. So back in November, we've pretty much plateaued out for the past, 5-6 months now. And January and February were real sticker shock months, I think, for our marketplace, folks that were calling in looking to potentially buy, anywhere between 5 to a couple of hundred acres. Those rates really, for lack of better terms, hit them in the mouth. And you'd have that conversation, then you wouldn't hear back from that person after you sent maybe a pre-qual link or an application. That was not uncommon. And I forgot to mention this personally, back in mid-December, I actually had, my wife and I had our first little boy. So I've got a 5-month-old back at the house. So, which has been awesome. I am a little bit more tired these days.
Oh yeah, that'll do it.
Absolutely. So I took about 3 to 4 weeks off back to end the year throughout the holidays and to start 2023. My pipeline was empty when I came back, so it was time to rebuild that pipeline. January and February were the skinniest months I've experienced in my 5 years lending money, and it wasn't for lack of conversation, but again, I think it was more tire kickers, more sticker shock, dealing with those kinds of effects. Ever since then, it was really the 1st of March. There's been really no change in our rates. They've fluctuated up and down a little bit, but they've remained pretty consistent. I think the folks that were maybe in the marketplace originally and got hit with those interest rate talks kind of came back and circled back and realized, hey, this might not be changing for the next year, 2, 3 years. So this could be the new normal. And I think that realization really hit our, consumers, and, they have began to really jump back in the market. And we have been very, very busy over these past 4 months, which is a great thing. Really.
Over the last couple of weeks with the rate increase that just happened, right?
Absolutely. I think I've got 13 applications in the past 7 business days.
Oh, wow. Okay.
Yes.
Yeah. And it's sort of interesting because, we've talked with, we talked to a professor here in the Midwest a few months ago to sort of get a market update, sort of, what's going on with the marketplace for 2023 as far as projections. And the overall projection was still a hot to warm market, but more of a plateau rather than these like 4 and 5x increases that we've experienced over the last few years. Sort of a calming, but not necessarily a cooling in the market. Is that kind of what you're seeing as well?
I would agree with that 1,000%. Absolutely. Yep. And my particular market compared to out in the Midwest, the Midwestern farmers and farm credits customers out there would laugh at the size farms that we particularly have in my local area of South Carolina. But my general market is more of your W-2 employees that have day jobs that want anywhere between 5 to a couple hundred acres to invest in and play on and recreate on, and ultimately, possibly be somewhere where they want to build a home on and be on forever. So there is some emotional attachment with that kind of purchase and that kind of buyer. And I think if you have been thinking about doing something like this and making this kind of investment for some time, and then something completely out of your control, like interest rates comes to play, I think you're willing to take a chance in hopes that within the next couple of years, interest rates will come back down and we can look to refinance that note.
Yeah, that's a conversation I've been having a little bit lately, where it's like, we're hoping the interest rates come back down, but it's one of those like, I don't know if you can bank on it. It's difficult to bank on something like that. You want to see it because it'll drive, just the economy in general. But at the same time, like it's a little bit of a fix right now. It's been so low for so long. You think about the interest rates of the 80s, early 90s and stuff. Early 80s, we had like 14% interest rates, and that wasn't uncommon. There's still low rates right now. It's just the market, there's sticker shock. Like you said, the market is not caught up in terms of its overall price as compared to where the interest rates make that in terms of cash flow. And so it's a unique situation, because I think a lot of people are kind of sidelined, expecting rates to drop eventually, but then realizing that they're kind of sticking around for a bit, if not increasing.
Absolutely. Absolutely.
So within that, obviously you're working with interest rates. You're still getting buyers in. It's sort of matching every analysis that we looked at for the last, the last year, projecting into 2023, that we're going to see more of a plateau. It's not going to be quite frankly, the market was unsustainably hot for 2 years there. And so we're seeing more of I would call it a rational market on some level. So what are the tools and opportunities that people have within the system right now to sort of to access the land market?
As far as researching and finding out what's available, is that what you're meaning?
Well, I just didn't know, you mentioned the patronage program or the cooperative structure that you guys work with or things like that. I just didn't know if those kind of tied into this and made things more accessible or.
Absolutely. So let's hit on that patronage program, actually. So like I mentioned, AgSouth and Farm Credit in general is member owned, meaning the customer base owns that Farm Credit Association. So whenever you become a member or take out a loan to buy a piece of property with AgSouth, you are buying stock, and you are then a stockholder. So that is a maximum $1,000 worth of stock that is equated to one share. You cannot buy any more stock. I get that question all the time. But essentially, the biggest benefit of doing business with Farm Credit in general is that patronage program. So whenever AgSouth or Farm Credit in general does well, we want our members to do well also. So say an 8.5% interest rate on the surface, that's going to act, as far as AgSouth's historic 30-year average, that's going to act much closer to 6.25% when it's all said and done, because you are going to get a check back every single year that you have an active loan with us. And that's going to equate to generally about 25 cents on every single dollar that you pay in interest expense the previous year. That's very powerful. And those initial conversations with folks who have never done business with AgSouth or Farm Credit previously, they hear that, but it's in one ear and out the other. And then come April 1st of the following year, that's generally when our patronage checks go out. They get this check and we get tons of calls asking if it's legitimate. Is it real? What is this about? And then I have to remind them of that conversation. And then they are so thankful. And that light, that aha moment hits them and they realize, wow, okay, this is a little bit different than what I'm accustomed to versus my typical commercial bank.
Yeah, if you were unaware, that would throw you off. You'd be like, I'm sorry, man, I don't have any relatives in Zimbabwe trying to give me checks. Like,
yep, that's exactly right. Yep, so it does pay to do business with Farm Credit. It is very difficult to compare a home mortgage with a land mortgage, a home loan with a land loan. Speaking nationally, we have mortgages here in South Carolina.
Yeah.
But so right now, as far as I know, the 30-year conventional home mortgage or home loan is around 7%. So we're closer to about 1.5 over for a land or farm loan. When it's all said and done, we're actually beating that 7% home loan rate with the effective patronage. So it's hard for somebody to grasp that who has never done business with us. But if you got a hold of some of our existing members who have been doing business with us for a long time, they're our best sellers and advocates for the program and what we do and what we stand for as a company.
Right. Well, I mean, that's taking it from where you are now to like a 6.5%. Like that's a significant impact on cash flow. Granted, you don't get it till the end of the year, but it's a pretty good deal at the end of the year when you have something like that. You know, it becomes available and you're able to reincorporate that back into your overall holdings. That presents significant value.
It's your money to do with it what you want. You can apply it directly back to the loan, knock that principal down. You can take your family on a vacation, buy groceries. It's your business. It's whatever you'd like to do with it. But it's an extremely powerful tool and part of doing business with Farm Credit.
Right. Oh, yeah. And you mentioned like farms, you know, any kind of working property, you mean income producing property, whether it's farm or ranch or something like that, that lets you reinvest into that property and try to maximize it for further production. So you also mentioned something about, you know, a lot of people when they're looking to buy land, and this is something that was actually, it's newer to me as I was looking at it. Because when I think about improving a home, right, like you're thinking about taking out a HELOC, maybe like a renovation loan or something like that. And they're a little sticky to look at going through. With land, most people do want to make land improvements on some level. Like if it's a hunting property, you need to set up your shooting lanes, set up your food plots, establish a pond. If you want to do duck hunting, you know, you got to get your duck impoundment ready. Those all take cash flow if you don't have it on hand. And so a lot of people are probably looking and considering those same options. Like, man, I got to do a HELOC on my home to improve this hunting land or something like that. And so that's where I was really interested too. One, you have this, you know, the patronage program that you're talking about, or you get a return at the end of the year. That's one thing. But then you also talked about doing improvement loans, which I was definitely interested in hearing about. You know, for those out there that were not aware of this, this is a very cool product.
Absolutely. So going back to what differentiates Farm Credit versus commercial banks who are willing to lend on land and farm purchases, for the most part, as far as I'm aware, that commercial bank, they're there for that one-time transaction, and good luck getting an improvement loan to actually make the property something that you can see and envision long-term. With Farm Credit, we are here for the long haul. We want the long-term relationship with you. We want not only that initial purchase loan, but we want to help you make that property the end goal property that you have in your goals and visions. So yes, we have the ability to make improvement loans. So like you mentioned, for a recreational hunting property, we've got the ability to help fund construction loans to build yourself a cabin, build yourself some storage sheds or equipment sheds, fencing. If you needed to harvest some timber and you wanted to establish some open land, we can help with everything and anything you can think of when it comes to land and farm improvements.
And what does that look like as far as minimum and maximum caps on improvement amounts that you can do? And then I'm assuming ties back to there's credit rating limitations in there for sure. Absolutely. But as far as like, what's the constraints within something like that?
So generally it's all about loan to value. So we can lend as much as 85%, 80% total loan to value, dependent on the account balance per se, but as long as we can get that thing to cash flow appropriately and it makes sense from a cash flow perspective, it really comes down to the amount of equity that you have in that track versus an updated appraisal. And we've got the ability to do a prospective value, or as will be appraisals, as if that improvement existed today.
Up to 85%.
Up to 85%.
That's an enormous amount of leverage that somebody could get off of a piece of land right there.
Absolutely. So if you've had an open account and loan with us on a farm that you bought, say, 5-10 years ago, you've really paid that thing down and beat that principal down. And not only with natural appreciation that we've experienced over the last several years, there's so much equity to tap into there. If you'd like to do that, you have the ability to. So yes, it does come down to credit and other factors, but that loanable value is it's unmatched, in my opinion, to our competitors.
What's typical term on an improvement loan like that?
Typically 15 to 20 years. It depends on what you're doing, but we can customize that to what makes sense. So, let's say a 20-acre horse farm that needs new fencing. 10 years is probably what we're comfortable going, but if we need to go out longer to make sense to the customer, we'll do that.
Gotcha. So these are enormously powerful tools that I think a lot of people are unaware of. Because like I said, I think people conventionally look for, some kind of HELOC or some kind of tool like that, similar to the residential market. Now, I'm speaking way under the level of probably most of the experienced farmers out there. Like, oh, you moron! This stuff has always been. But I like to talk to an audience that as well that may not know about these things for sure. And this is something that's when you put this product together, when you work with this product, is this a farm credit product or is this just with your institution?
For the most part, this should be an available product nationwide through Farm Credit. As far as I would be willing to bet that, yes, absolutely.
Excellent. And so as a general, you mentioned that it's hard to get commercial loans. There's 5-acre limitation that you all work with. What are those sort of limitations that you look at as far as the size of property that makes it a land loan versus, or if it's under 5 acres, a lot of times you can't get a land loan, right? Or a commercial loan, you're kind of just got to shell out cash or, see you later.
Yep, absolutely. So as far as the really small stuff that we do see a fair amount, so anything under 5 acres, the first requirement is you've got to have intent to build your primary residence, whether that's tomorrow or 30 years from now. That's the only way we can qualify that as an eligible type of property for this individual. The only two things that we can do for that individual are help with the lot purchase. And then we do have several construction products, whether that's through the farm credit side or our home mortgage team. The home mortgage department, that is not every farm credit association nationwide has that division. So it is an association by association basis, but we in particular do. So going to the smaller hobby farms, so 5 acres is your minimum requirement. On that 5 to 10, 20 acre types of purchases, we do have to establish some sort of agricultural intent with that property. For something as small as 5 acres, it may not be as simple as, well, I'm going to grow trees out there. It may have to be a little bit more complex. Our minimum threshold to qualify you as a part-time farmer is you have to be able to show the potential to gross $1,000 in annual ag farm income.
Okay.
So that's your
income
minimum
to qualify. Okay.
Yep. That's your minimum. And for the most part, if you own 20 acres, you should be able to put a pretty simple farm business plan out there that shows that you can produce $1,000 of gross income.
How does that factor in with a timber investment is something I would be curious about, because a lot of times, you're looking at an index of 20 years, you won't be getting a return for 15, 20 years, depending on the maturity of the trees. So how do you break it down into this is $1,000 a year income?
So that's a great question. If let's say you own 25, 30 plus acres of timberland, we're not going to be sticklers about that. We can use our heads and common sense to show that this is an ag property. So in nature, we could very likely get $1,000 worth of gross annual farm income off of that particular piece of property. That is a good segue or transition though for timber properties in particular. So 50 plus acre timber tracts. I do get asked this all the time when somebody is looking to buy this type of property. Hey, can I go ahead and harvest or pre-sell that timber and use that as a portion or all of my down payment requirement? I don't want to speak for associations nationwide, but at least for AgSouth in particular, the answer is no. We do need for you to actually have some skin in the game and utilize some of your individual sweat equity, not just what's available and out there on what you're purchasing. Also, a lot of people don't realize that timber is actually a part of our collateral and it does contribute value. So whenever you're going to do a first, second thinning or a clear cut harvest, you could, depending on the size tract, it could be a detriment to our overall appraised value position. So people, it is good to have relationships with foresters and timber brokers who know AgSouth and know that they need to get a release from AgSouth on that timber that is to be harvested prior to actually cutting that wood. And it's a pretty simple and easy conversation with most borrowers who do get it. For the most part, it is dictated by the equity position that you have in that tract. So if you have really strong equity and we're at a low overall loan to value position, if you're looking to replant that tract, you can keep the majority of those timber proceeds and do with it what you will. Now, if we're at a higher loan to value position, say 80, 75%, we need that loan to value position pre-release to remain as is post-release. Meaning, if that tract is valued, if you're at a 75% loan to value position and you come to me with a timber sales agreement, I'm going to show you at least what proceeds need to come back to that loan to get us to that post-release loan to value position. And we may need to have an updated appraisal done prior to that timber being harvested to get a better depiction on what that looks like. And the great thing is we have awesome resources internally and externally when it comes to appraisers. We've got a team of staff appraisers here. Most farm credit associations do have appraisers on staff that understand the types of properties that we're lending against. So we've got a really strong team in place to help you understand why we need what we need in each particular scenario.
So when just making sure I want to repeat back to you so I make sure I understand the complexity of it. When you were talking about, and because I've heard this several times with people that they'll buy timber property, sell off some of the timber to pay off some of what they put into the property initially. And so you're saying when you go in and you evaluate the property, you take into account not just where the trees are at now, but where they would typically be harvested. So if somebody were to cut, they might be taking away value that you were anticipating this property to have later on. And so
Absolutely.
You're reducing the overall value of the property. So then when they pay back in, they'll pay some of the loan down, but then you at Farm Credit can't recapture the value when that person goes to sell. It's going to be upside down.
That's correct. Absolutely.
Okay.
You're all over it.
That's interesting because that is a sort of a proposition that a lot of people kind of get into their head. So you would have to be working with a forester to say, okay, no, this is indexed for like 15 years. You don't want to cut these for 15 years. Otherwise, you're not going to maximize the value. And that's what went into the loan in the first place. Is there a penalty
Absolutely.
for something like that if you reduce the value to something like that when they have a loan on it?
Oh, not at all.
No,
not at all. You are welcome to apply as much money at any point in time towards principal as you'd like it. No additional penalty.
Got you. No, those are really good things to keep in mind, especially for those timber investors out there. That's one of those. It's a very, very specific piece that you could get yourself in the hot water over. And
our appraisers, they understand that up front on a larger timber tract, so something a couple hundred acres and greater, we need a valuation on not only that the tract as a whole, but we need that broken out in between that dirt value versus that standing timber value today, just so we have a very good understanding if you do have intentions to clear cut or make a second or third thinning in the near future. we need to have an idea about what we're going to be left with at the end of the day.
Yeah. Well, so I wanted to circle back to the interest rates a little bit, to overall market. What advice do you have for people that are sitting on the sidelines right now, that are watching the markets, that are freaked out about interest rates, watching the economy? And I would give it more specific circumstance, right? Somebody who wants to get into land, purchase it, either whether it's recreation, they want like, a side hustle farm, or, they want to run some cattle somewhere, but they're sort of sidelined right now and looking at it. What's sort of your advice?
Sure. So if I knew what interest rates were going to be like in a month, 2 months, 3 months going forward, I'd be doing something a little bit different and making a lot more money. But at the same time, I believe this is going to be the new normal for some time to come, for at least a year to two. I think we're in this. So I think where we're at right now, this is going to be an intermediate or short-term outlook about what interest rates look like. And the thing is, when it comes to values of properties, we're pretty much seeing values, steady, just like the home market over the past 3 years. Your home value just has appreciated tremendously over the last several years. The land market did the exact same thing, and land values continue to stay steady, and they're holding. And as long as things are, this is coming directly from one of my counterparts over at National Land. He told me the other day, as long as something is priced appropriately, meaning within a 10%, market value, things are moving fast still. So I think if you are really in the game and in the market, don't be afraid to jump on something right now just because of the interest rates. Going back to AgSouth being a member-owned cooperative, we live by the motto, we're here to take care of our customers. And that's something that AgSouth really prides itself on, is the level of customer service. Farm Credit as a whole is a boots on the ground, brick and mortar type of establishment. And as far as I know, we always will be. We're still growing and advancing with technology, but we want to have that one-on-one relationship between our staff members and our customers. And we offer several types of benefits when it comes to down the line, potentially repricing loans and refinancing loans. So if this does change in a year, 2 years, and rates dip back down to, closer to where they were 2 years ago, a year ago, we've got tools in place to help you at a cost efficient and effective manner. We offer a repricing tool or a note modification tool, where we were doing this like crazy back in, I guess that was 2019, 2020, maybe when somebody invested in a piece of property in, say, 2018, when rates were a little bit more comparable to where they are today, and then they dipped and fell off the face of the earth. We had reports every single day where we were calling our customers saying, hey, I can lower your rate from X to Y. And everybody always wanted to know, what's the catch? What do I got to do? How much is this going to cost? For the most part, it may cost you $100 to do that repricing program. The catch is 3 documents that we need you to sign. You're on the same exact amortization schedule. Nothing changes but your rate, and then also, obviously, the payment. So we can do that as many times as rates continue to come down. It's kind of the whole purpose and principle behind that cooperative structure. So that is something that is just, our members could not thank us enough back whenever we were doing that. And hopefully we have the opportunity to do that again here in the not so distant future.
I agree, very much so. Well, hey, Spencer, I appreciate your time here. I want to let you drop any kind of last notes you want to drop in here.
Man, it's been a pleasure speaking with you. This was my very first guest appearance on a podcast. So thank you very much for the opportunity. I really do appreciate it. I think the world of the folks that I do business with over at National Land in South Carolina. You guys have an incredible team. You have great leadership. You know your stuff. Just like with Farm Credit, you have relationships with your customer base and your clients. And you have the resources and connections that set your clients up for success. And we try and model our business nearly identically. So it's been a pleasure speaking with you today. And if I can ever help you or do anything for you, please let me know.
Man, you're going to make me send you a bottle of bourbon or something. I didn't expect you to plug it in the land. Like,
I love that. I will not turn that down.
All right. I appreciate it, man. We'll get you back on here sometime.
That sounds great. Thank you, Mac.
This concludes episode number 45 for the National Land Realty podcast, discussing land lending with Spencer Floyd of AgSouth Farm Credit. You can learn more about land ownership and the buying and selling of land at nationalland.com.